We've been looking at a number of reports from different asset managers in Nigeria. We've enjoyed them because that's what we do at the beginning of the year. Everyone's got an outlook. So ARM Securities has Balancing Growth and Hurdles. This is actually a global report, and it's very thorough. But for the purpose of time, we're going to be focusing mainly on Nigeria, in fact, only on Nigeria for the report. So I'm very happy to have Oyinkansola Aregbesola, who is a banking analyst with ARM Securities, and also Callista Chileke, who is a consumer goods analyst with ARM. Ladies, good morning and Happy New Year to you both.
Good morning.
Thanks for joining us. All right, so I want to start with since we're focusing on Nigeria, the budget. I think we've got the assumptions, which everyone is familiar with. I wanted to get your take, whichever one of you wants to hop on this. What do you make of the assumptions for 2025, and how does that factor into your outlook for the year?
All right, thank you for having us again. Happy New Year. So looking at federal government's projection, I'll start with the oil projection of 2.06 million barrels per day. For us at ARM, we are expecting a 1.5 million barrels production, million barrels per day. And reason being, looking at the average that the government has done so far. For last year, they did about 1.31 million barrels per day. So we think we would see an improvement in that space, but not to that level of 2.06 million barrels a day due to the ongoing structural issues like oil theft and the likes. Moving on to the inflation numbers, you've seen 15.75%.
Big debate there.
Exactly. Projection, right?
Yeah.
Yeah. So for us at ARM again, our December outlook is 27.26%. We think, yes, we do think inflation will decelerate, but not to that extent, due to, the ongoing structural issues. But, I would say that, I'll just put a caveat, right? So I would say like a risk to our outlook would be this rebasing that they are doing at the moment. I mean, we're using 2024 as base year, which should, affect inflation in terms of deceleration. So we could actually see it decelerate faster than we had projected.
Yeah.
In terms of GDP numbers, 4.6%. For us, we are expecting 4.13% growth rate due to improvements in the oil sector and as well as the non-oil sector. But then again, like I said earlier, a risk to the outlook again is this rebasing.
Right.
With that, we could see like an upshoot in inflation, in GDP numbers.
The rebasing is causing lots of discussions. Let's go to another chart that you guys have, oil and non-oil. Wanted to ask the takeaway for you all as far as the performance of the oil sector in 2024, also non-oil as well. Yes, I really like your charts. So yeah, for all those that are watching, what's that? The purple bars, oil GDP, which of course was in contraction territory first couple quarters of 2023, and then we saw a rebound in Q4, and then growth, and then in gray, non-oil GDP, and then you've got real GDP growth, the black line there. So what is the takeaway in terms of oil and non-oil, and what we expect for 2025?
Yeah, so I think a major takeaway for us was, seeing that we couldn't meet the OPEC quota of 1.5 million barrels per day in 2024. I think in Q3 2024, we hit 1.47 million barrels per day. So we're optimistic that, like Oyinko has said, we could reach 1.5 million barrels per day. And for the non-oil sector, we know how 2024 was for all of us: FX, depreciation, inflation, and all that fed into some sort of hindered kind of growth in the non-oil space. We saw the agricultural sector was hindered by insecurity in food producing states, as well as manufacturing sector by high inflation effects. So those were our major takeaways for 2024 in those spaces. Great
stuff. Oyinkansola mentioned inflation. I've got another chart here. I could just display these charts all day long because I enjoy them so much. They're just very informative, and they paint a picture. You guys do a great job. So the inflation trajectory, there it is. So food in gray, core, which excludes your volatile food and energy, and then you've got your headline, right? So 34.6 for November. How do we describe inflation's trajectory in 2024, and what we're expecting for this year?
Okay, so in terms of inflation in 2024, I mean, we saw it start at 29.90% in January. Then we begin to see an acceleration. We saw a peak by June at 34.19%, but then like a deceleration before it started climbing. Of course, the drivers really were food prices, and particularly for the first quarter of the year, we saw how FX, how Naira actually went as low as 1819, and that affected, inflation numbers as well. We also see high energy costs in terms of fuel, transport. So those were the things that actually, drove, that inflation figures up to 34.90% by November. But in terms of our outlook for 2025, like I'd mentioned earlier, that we are seeing inflation decline to 27.26% by December this year. And, the reason why we're thinking it will decelerate is because we're expecting stable FX this year compared to 2024. We do not expect to see that much volatility, even as CBN, continue to, introduce, policies that would, enforce, transparency in the FX market. So we're expecting to see that deceleration. And of course, this rebasing as well is also a factor. So I mean, food basket has been reduced. And so those things that are actually affecting inflation numbers have actually been reduced in terms of weight. So we could actually see deceleration in inflation further in 2025.
Perfect. Thanks, Oyinkansola. So, Callista, to piggyback off that, you cover consumer goods. So what is the likely impact of inflation this year on the consumer goods sector?
Well, just to take us back through memory lane,
we
know how 2024 or even 2023 was for the consumer goods players. They faced FX losses, significant FX losses on the back of high inflation and whatnot. So coming into 2025, we're very positive on that, on the sector, given that, our expectation of a decelerating inflation as well as a much more stable exchange rate in 2025. So what we think is, we're also seeing some players in the consumer goods sector, engage in backward integration, seeing Unilever as well as Barfoods, engage in some backward integration strategies. So we think that going to 2025, there's going to be they are going to have a much more better performance than what they recorded in 2023 and 2024.
Great. So that actually takes me to the equities market. You've got another chart, very interesting chart here, looking at the performance of a number of sectors on the NGX. I really enjoyed this. So, Oyinkansola, I'm going to focus more on banking because banking is in. But just looking at this, insurance so gray is 24 year to date. I think purple is 2023. Insurance did better in 24 than it did in 23. But jumping oil, so insurance, oil, consumer, industrial, banking, the fifth, 1, 2, 3, 4, 5. I mean, the performance in 2023 was a lot better than 2024 in terms of year-to-date returns on the NGX. What, Oyinkansola, is your outlook for the banking sector as far as stocks concerned for this year?
All right. So in terms of stock, I think they will perform better this year compared to 2024. I mean, we've seen the negative sentiments later in 2024 as a result of the banking recapitalization exercise and as well as the windfall tax that was, announced. So that, sent more like a negative sentiment to the market, and we saw those losses, by H2. But we expect a rebound this year, on the back of higher net interest income that these banks will post as a result of the elevated interest rate environment. We're also expecting, I mean, some of these banks have started to announce, their successful capital raise. Access Bank, for example, GTCO, had mentioned that they had raised, 209 billion, as of, I think, this morning. So yes, we're still expecting some of those news to, keep rolling in, and that should send positive sentiments to the market. So we're expecting the bank to close, quite positive compared to last year.
Great. Foreign exchange. I mean, there's so many topics to touch on here. Another chart, and this is great because the chart actually shows the narrowing of the spread between the autonomous foreign exchange market, NAFEM, and the parallel markets. And you are going back all the way to, what is that, the 2nd of January of 2024, all the way through to the 27th of December of 2024. So do we expect the spread, and I know Oyinkansola mentioned that weakness to 1,008, 1,009, but we've appreciated a bit to, I guess, 1,500. Do we expect that the gap between those two lines to narrow further this year or just tread water? What are we looking at for Forex?
Well, yeah, I would say we expect it to, narrow a bit further, given that, we expect the implementation of the June 2023 FX liberalization policy is actually a major has a major effect on the difference between the official and parallel markets. So what I would say is in 2025, we should actually look out for a much more lesser difference between the two currency rates. And if you also check the trend before the implementation of the EFEMS, that's the Electronic Foreign Exchange Management System, we saw that the gap between the official and parallel markets was actually much more smaller. But after the implementation, it grew much more wider, closing the year at above 96 naira. When you compare that to 2023, where it was at above 200 naira, we can see, we're getting somewhere. Basically, we should see a much more smaller difference this year.
All right, great. Which of these charts do we take first? Yeah, I've got FPI and FDI. Let's post, I think it's foreign portfolio investment that we'll look at first. I wanted to get your the take from you both. Yeah, this is FDI. So very illustrative chart that shows, in millions of dollars, what was that? Q1 2022, about 154. Then you guys have that box, text box there that shows with the arrow where long-term investors exited the market, and then you've got that drop to about $29.8 million in Q2 2024. So starting with, let's do the FDI first, which I think is a lot of folks regard as more important, but then others argue that at least it's the flow of money through the economy that matters. So both FDI and FDI matter. But what's the outlook? Is that line going to continue to fall further this year, or will it pick up? How are we seeing FDI?
Okay, so for foreign direct investments, just like we had seen in the charts, more like we've seen it decline last year, due to structural issues. There's the inflationary pressure. There's also the instability of policies being implemented, and there's the issue of insecurity, right? So that actually affected this what we are saying. So, but for 2025, we were not exactly too positive about foreign direct investments coming in at this time. Because I think that investors will still need to gauge the economy. Even though we are expecting to see deceleration in inflation rates and economy to grow further, we still expect them to come more in the medium term than the short term.
All right, great. So now next chart is FPI, foreign portfolio investment, and you got a trend analysis there. The drop is not as pronounced as FDI because you actually do see, and again, I really do love these charts. So in black is the equity market, in what is that, grayish bonds. Got money market instruments in yellow, and then you got foreign portfolio investments, which is the purple line. And you can see there, as you guys have pointed out, the impact of CBN policies on FPI inflow. You circle it, look at the jump. From Q3 2023 to Q4, dramatic rise. So pretty opposite to FDI. So what's the, for anybody who is wondering, what does that mean? And then what is your outlook for foreign portfolio investment for this year that we're in?
All right, so for foreign portfolio investment, just like what I highlighted in the chart, the CBN's policy actually drove, this jump that we saw last year, particularly in Q1 when T-bills rates, treasury bills rates.
Delicious.
It was actually very juicy, right? Yeah. So that actually, prompted these foreign portfolio investors to come into the, market, but then we saw them took profits in Q2, right? So for 2025, we're expecting to see them come in. Given the fact that, we expect stable FX and, of course, the more stable economy. So we're actually expecting to see more of this in 2025.
Great stuff. All right, final question, I guess, and again, I encourage everyone to download this report because of time, we couldn't go global. You guys went global, US, Europe, Asia, and everything. Just to summarize, what's the takeaway for Nigeria for 2025? What's the report saying?
All right, so for Nigeria, we're actually expecting a stable economy in 2025. And we're expecting deceleration in inflation numbers and economy to grow further in 2025. So that means, there's actually room, there's opportunity basically, awaiting anyone that is, ready to grab, such opportunity, particularly in our long investment wise. So, of course, that's why, ARM is also, here to guide people to, invest
to put
wisely.
their money in the right places, because you guys will be advising them. Oyinkansola Aregbesola, banking analyst, Callista Chileke, consumer goods analyst, both from ARM. Thank you for a really lovely report, very illustrative. It tells a good story, lots of colors, lots of charts, because that's what we like here, because the audience is able to put that together. Thanks for the outlook. Maybe we'll have you guys back, because there's so much going on in the consumer goods sector and the banking space. Thanks for your time. Really appreciate it.